without stock market, there is no company will work in India. There are like 5,000 listed in this company. There are big IT giants and different sectors of the companies are like listed in this market. So like this is the basics which I am going to explain today, like introduction and the market terminologies and how trading happens, and what is a trading versus investing. There are people are very much confused about what is trading and investing. These are the two different things actually, tradings and investing, because trading will be just a short term and investing will be in long term. So the factors affecting in the stock market and the types of online orders and the order placement, how it will happen. Okay, this is the first slide. How like how it is the different asset classes has been given in. For example, if you have invested 10 years back, like in 2003, 10 lakhs investment in equity, that current price in 2000 17, it would have been 82 lakhs. Okay, and if you have invested in gold, that would have been like half of that amount, like 45 lakhs. If you have invested in debt funds, it will be like 25 lakhs, and cash or fixed deposit, it will be like 25 lakhs. So this is the difference you can make in this slide, how the equity in long term will give all other than these three asset classes. Okay, you can see it is more than double here, more than 4 times, and here it is more than 4 times. So here it is very important to select the correct stock. How we can like to take the correct stocks, that is very important. Okay. So next, I am going to tell you about what is the what is stock market. Is stock market is a market which shares publicly held companies are issued at the traded either through exchange or OTC. That is a over the counter market. Okay, it is a place where the shares buys and sell the shares. Actually, stock may be bought or sold only if it is listed on the exchange. So you all would have come to know that there is a IPO, right? Public issue. Those are not listed in the stock exchange. First time when company first time when the companies are listed. Hello. Okay, that will be not in the secondary market. Okay, only the primary market it will come, that IPO. Then the secondary market comes into existence. So there the shares are traded. Okay. And here I am just going to explain about primary market and what is a primary market. As I just now explained about this, and this is a like where the company registered to issue a certain amount of shares to raise the money. Like when the company first time issuing to the public to raise some capital, so they will come to the IPO. That everybody knows, like there is a newly IPO is coming with the issue price this much, and then it will get into the stock market. It will be listed in the stock exchange like NSE or BSE. So that we will call, after listing, we call it as a secondary market. Okay, once the securities are listed in the stock market, that will call as a secondary market, where the investor can exchange their shares and cash. So suppose here in the primary market, you can't directly buy from the investor to investor. This is from the issuer to the investor, and this is the difference here, the issue like investor to investor. You just click on online order and you can buy from the current market. That is called as a secondary market. Okay. So this is just a overview I'm giving, but in depth I will be taking next session actually. So like in India, there are two exchanges in stock market. One is like a BSE, which is the oldest exchange in it is established in 1875. Okay, this is also like one of the, now it is like almost like 10th largest stock exchange in Asia. It has around total market capitalization at in 2018 till it is like 2.3 trillion dollar. Now it is like 3.2 trillion dollar at the current in 2023. Okay, in NSE it is like it is also one of the oldest exchange, established in 1992, but after BSE. Okay, started with the BSE, then in 1992 this is established. So these two exchanges we must know. If you are started investing, or if you are learning into the stock market, you must know these two exchanges in India. This is the BSE and this is the NSE. the same building which I posted here. This is looks like the same building in NSE is been like, a Bombay Stock Exchange in Bombay, and NSE is National Stock Exchange in Bangalore as well. Okay, and this is the SEBI. This is the controlling body of the exchanges, like Security Exchange Board of India, which regulate the security market. So the main reason of, because you can see any of the business or anywhere, there is one controlling body. Okay, so to control the market from the scammers, and otherwise if there is no controls, so they can misuse the people, the money, and shares. It's not an easy to do the scammings in the stock market. So but in trading it is happening. But when the company is listed, all this procedure they have to follow. They have to report everything to the SEBI. Actually, like SEBI will act upon that. And these are all the three main major functions which SEBI will do. They're protecting the interest of the investors in the stocks, and promoting the development of the stock market, and regulating the stock market. Okay. So here, when it comes to the stockbroker, so without stockbroker, we can't even trade in shares. Here, like we know that there are many big stockbrokers like Zerodha, Angel Broking, Sharekhan, Indian Infoline, Motilal Oswal. All these are called as a brokers, stockbrokers. They are facilitating us to trade in the stock market. Like, for suppose if I am buying one share in Wipro, Infosys, so I'll put an order. But here in between, we don't know who is the broker in between. They communicate each other, and they will, for example, if I am buying a 10 shares, I will pay the money for Infosys 20,000. That 20,000 will be exchanged. Who is exchanging? This is the stockbroker, will act as an intermediary there. Okay, he will buy the share on behalf of us, and he will transfer the money to that seller, and buyer will get the shares, and seller will get the cash. For that, we need a stockbroker. Okay, here the stockbrokers will charge a certain amount of commission for their activity. So without charges, nothing will happen, right? That is the reason that you can see whenever you do any transaction, we get be charged on the commission. That is called as a commission. Okay, so if I do 10 shares of, if I buy 10 shares of Infosys, like 20,000 will cost. So that 20,000 I will pay just around 30-40 rupees that transaction. That includes all the charges like brokerages and the GST and the government fees, stamp fees, all this included. So this is the that is called as a commission when we do any trading and investment. So that is called as a commission. Okay, here there are like when we do demat account opening, that time we must have a bank account to link in the demat account. Directly demat account we can't do anything, because each broker will have a certain banks will be listed. So this is the one of the example which I given as like Angel Broking have a
Hello.
linked all.
Hello.
Yeah.
Yeah. My friend is waiting for lobby. Please accept.
Okay, 1 second. Just. Okay.
Yeah. Thank you.
Okay, sorry. Yeah, this is called a broker. Okay, like this is the major roles of the broker which I was explaining. And these are all the banks. Like it is depends on the brokers who are linked with that particular banks. This is example of the one of the Angel Broking, which has an linked these accounts. And also they have a, now everything digitalized, like they have a UPI, phone pay, yeah, and Google Pay. All this has been linked. It has been easy now to do the trading and investment. Okay, so like now when it comes to the BSE and NSE, there we come that index. Okay, this is the index stock market, the measurement of section of the stock market. Like there are 5,000 are companies are listed, but in this index that will be not considered. Okay, so it is a computed from the prices of the selected, like, high leverage stock. That is it is not like small stocks, like small cap, like a small cap capital, or like, I will come what is a like, next slide, what is a large cap, mid cap, and small cap. So here it is like most of the major highly weighted stocks in index will be counted, whether to decide at the end of the day whether it is going, like, you would have seen all that time, like, market crash, like, okay, NSE crashed, BSE crashed, all these things terms, right? In whenever you said in the news, that is called as index. Okay, we just based on this index only, whether we come into at the end of the day, whether it's coming down or up. Okay, this is like we have a two index like Sensex. This is called as like, it is introduced by Bombay Stock Exchange, which I was saying about the BSE, right? This is linked to the BSE. Okay, it is like, from established in 1986. Actually, it comprises as of now 30 highly weighted stocks. Okay, Nifty, the name itself, we can see that Nifty, it is considered a 50 top stocks of NSE. This is a part of the NSE. Okay, like there are heavily 50 weighted like, different sector. It includes like different sectors, like 12 sectors. You can sectors means you can like, understand it is about, like, some manufacturing sectors, and like IT sectors. So different sector in this 12 sectors has been included. It is a, like, again depth, it will be not covered in this today, what and all the sector which I am going to, that I will be covering in coming session. Okay, so this is the when it comes to the stock market, like, you would have know that there is a difference between stock and share. Okay, when you invest in your money, your company gives you a part of the company, which is just they will called as a share. So you are the shareholder of the company. Suppose if you buy one share in that Infosys, you are the shareholder of the company, because you are the owner of that company. That is called as an each because when it comes to shares, you are the owner of the company. Whatever comes, like whether it's a profit or loss, you are the owner. So that we called as, like, people who have an whoever own a share, they are the owners of the company. Okay, so then next slide, which is saying about what is a bull market, and this is the basics of stock market. People who might have heard that bull market and bear market, right? So this is the terms we call it is in the stock market. Like bull market, this is when the company is doing good and economy is doing good, all the prices are going up. Okay, upside prices are going up, like this is called about referring to only the index, which I said about in Sensex, like 30 stocks, and Nifty there are 50 stocks. This bull market will be referring to only those 30 and 50 stocks. Okay, not anything other than that. So based on those weighted average, you will be considered, and it will be considered as whether it's in bull market or it is in bear market. Okay, so like bear market is nothing but when there is nothing. Like you would have known that 2020, right? There is a huge recession and a lockdown, COVID lockdown happens. There is no business, there is no revenue, all the companies are shut, and the revenues are not coming up, and the companies are in very panic. People job loss has happened. So obviously what happened, all the stocks will come down. So it's all depend on, like, fundamental and fundamental and technical of the companies. Like when the company is, if I am not earning, for example, if I am giving the normal example, if I if I don't have any income, so daily incomes, and it is like, my lifestyle or my like, whatever my desires I cannot fulfill, right? The same thing here, if the companies are going on a loss, and they don't have enough project to run that, and they're not competitive enough in the competitive market, so this will affect the stock market and the stock price. That time the company a price, whatever the share price, will come down. Okay, that is the logic we actually have to understand. Also, when we invest, right, it is a very important to investigate, and whether that research and investment, like research and investment, is very important in the stock market. Okay, because here you have to learn like every day. Like you will get a chance to learn every day, because stock market is like a ocean. Okay, it's not like a 1 day or 2 days or 1 year learning. It is a ongoing process. It is like a ocean. You have a lot of things to learn. Once you are like technically expert, there is a there is like unlimited income you can gain from this. So there are people you can see that in the current market, right? Like you know about Warren Buffett, right? He started investing in, the more early you started, the more long term you started, your income will be more. You can't expect like today if I invested 10,000, that will grow in and next to 1 year or 2 year 10 lakhs like that. Okay, if you have a sound disciplined investor, then you should have a long term focus, because you can see that Warren Buffett, he started investing in 12. Now he is the world largest richest person in the world. And Rakesh Junjunwala, everybody knows, right? Rakesh Junjunwala, he started at just 5,000 22 years back, 23 years back, and he is having right now 25,000 crores net worth that he started in long term. Okay, one of the example which I give from the Rakesh Junjunwala. So, for example, if you see this Titan shares, okay, this is the power of the stock market. Okay, if you look into this Titan shares, which he bought like almost like 15 years back, Rakesh Junjunwala, he is a long term investor. So if he like 1 second, just a second. So if you look into this just 5 years back, this shares was like trading around uh, you can see this in 2020 when the market crash happened. This Titan shares was, this is one of the fundamentally good stock. Okay, is a Titan is a very good branded brand and the status they have in the market, and they have also like huge market capitalization, and worldwide they have a companies and outlet has been listed name Titan. So this Titan, you can see in market in 2020 crash, it came down to 829. Okay, so now you can see the current price is just in 2 years, 2.5 year, 2.5 year, it is reached to 3,000. So it is almost like 3 times in 2 years. So without risk, because here the market crash had happened because of the COVID. So that time we have to choose that right stock. This is the very important. Like whenever the market crash happen, what the people will do, they will sell the shares. That is not the right thing. Okay, when the market crash happens, they should have enough money to buy the shares, good fundamentally stocks. And if they wait for 2 3 years, that will be give like huge return without risk. This is not a trading, this is just a investing. Okay, trading is, I will explain in the next slide, that is a different topics actually. So you can see how much return you get it. This is like right now it is at the peak, 2963, right? Likewise, you have many shares, like you can see one of the shares like MRF, right? This is also like the same thing. If you look into this 5 years chart, okay, so you can see this 5 years chart. See, it
This
is
is the
just,
fluctuation of market, right?
yeah, correct. See, here the important thing is like what is the time horizon which you choose. So the basic chart analysis is nothing but when you go here and you can see in 1 year how much they get, and when you have to enter. So this is the right time to enter in the 1 year time frame. If you have, this is not the right time to enter. If you enter here, you have to wait another 1 year to cover at least 10% profit. But the timing of the market is very important here. Like when to, see, like if you buy here in this 70 65,000, then easily you would have covered it up in 90,000. So this is the basic chart, any layman can understand this. Okay, so just click 1 year share and you can understand. So this is I'm going to explain in the next slides actually. Like Okay, 1 second. So next session, I will be going to explain in the deep how the stock picking will happen and when to pick and what the price easily you can book the profit. Okay, this is the slides. Today I'm just going to, I just showed like one of the example. Okay, that's it. And then I'll be explaining about the shares face value. Okay, face value and the current value and the trade settlement. Okay, so what is the face value, right? It is a like nominal value when the company is like starting. It has been issued by the promoters, right? That is called as a face value. Okay, it is not when the company promoters they get with the face value. Okay, so like for example, you see that when Infosys started, the promoters will not pay that current market value. When the face value of Infosys is just 1 rupee or like 10 rupee, right? So that is called as a face value. Okay, and the current market value is nothing but what the current price of that stock price which is listed in after IPO. What is the current market price, which I showed right now? Current market price for Titan is like 3,000, right? So that is the uh, current market value. Okay, trade settlement. Here there is a trade settlement, right? For example, any money which you borrow or you pay, right? There is a settlement will happen, right? That is called as a, here it is called as a trade settlement. For example, if I am buying 5,000 rupees from someone, I will say that I will pay that 5,000 in 1 year. That is equally like 500 rupees for 12 months. So I will be settling that in that 12 months. Okay. In that normal example, if I give for the beginners, like, if nobody understand about the settlement part, here when it comes to trade, suppose if I am buying today the shares, that shares will immediately transfer to your demat account, but settlement will take T plus 1 days. Okay. As per the current market, it is like T plus 1 days. So earlier like T plus 2 days it was, like trading day plus 2 days. So suppose if I am buying like I am selling my today 10 shares of Infosys like 20,000. So immediately my 20 shares will go to the like whoever who buying the share, that amount, that shares will be transferred to his demat account immediately. But the amount will be shown in my demat account, whatever the amount after deduction of some small commission. And but I can't withdraw that money to my bank account until the T plus 1 days. Okay, after T plus 1 days, so if I sold today, tomorrow my amount will be reflected in that demat account. I can withdraw that amount to my bank account. That is called as a settlement. Okay. So here just 1 or 2 days. Suppose if I am holding 10 shares of Infosys, like 20,000, I want to sell the shares 20,000. Then immediately you can sell the shares and you can transfer that money to your bank account. Okay. Just you have to wait for 2 working days. That's it. In this, when it comes to settlement, there will be pay in and payout, and the portfolio and the brokerage, which I already explained about brokerage. And the portfolio is nothing but when you have many shares in your demat account, all together, that it will reflect as your portfolio. Okay, what is, whether it is in a profit or whether it is in loss. Okay, that is called as a portfolio. So here it is a stock market timings. Everybody are interested to know about the timing, right? Morning like 9 to 9 8. It is a pre-opening of the market. Okay, anybody can post that, but we cannot say that everybody will get that order executed. It is always go in the FIFO basis. Okay, people who are go first in first out, they will get the shares in the pre-market. Okay, but in post-market, everybody will get it actually. But the pre-market timing is like 9 to 9 8. The post-market is like 9:15 to 3:30. And post-market, after closing, it will be like the timings will be 15:40 to 16. So even in this place, you can order, but there is no guarantee that your order will be executed for the selling or buying in the limit orders. Okay. And next is like market capital. So if for example this is called as a market capital. Suppose I have a shares, a company shares, so which I have around 100 rupees, and with the 100 shares, So 100 into 100, how much it is? Like 100 into 100, I have around 1 lakh shares, right? So 1 lakh amount of market capitalization I have. So this is based on this market capitalization, whether we will come into decide whether this is a large cap stock, whether it's a mid cap stock, or it's a small cap stock. Okay, all the large cap stock will come into that as per the stock exchange. Will first company to 100 rank will call it as a large cap. From 101 to 250, it will call as a mid cap. In that mid cap and large cap, there are many sectors also included. That will be different sectors we can calculate, and this is small cap nothing but is a small market cap is very small. We can also call it as a penny stock, right? Everybody would have known that penny stocks is very risky, but it can give a huge loss, it can give also a huge return. That is again based on your risk taking ability. So if you have a
Yeah, I have one question here.
Yeah,
Hello.
tell me. Yeah, tell me, Narasimha.
Can you hear me?
Yeah.
Yeah, I have one question here. The large cap company, you said it like large cap company and mid cap and small cap. Large cap company, it means you need to, if you want to buy one share, okay.
Yeah.
We need to invest for one share more than 4 to 5,000, right?
Yeah, it is depends on the company. Like for example, if you one of the example I'll give, if you buy a TCS shares, right? TCS is a large cap company. Okay.
Yeah.
So
Okay.
one share you have to pay 2,500. So it depends. Titan is there, right? Titan is one of the largest company. You want to buy a large cap, that is like 3,000 you have to pay for one share. Most
That's
of
why I'm
the
asking. That amount also
yeah.
difference is there, no?
Yes. Yeah, both. That's what I'm telling you, right? Whenever it is a large cap, it is has to come to 100 of the rank. When it comes to this first to 100, right? There should be that company value also will be like like that. Like people, there is a good status in that market also. When it comes to that large cap, right? In this list,
Yeah, it's showing in top 10 companies, huh?
Correct.
Like that.
These are all the fundamentally very sound company. Okay.
Okay.
Yeah, most of these large cap and middle cap are fundamentally good company, and but the small caps are like a junk company, like penny stocks with a small price, and with a small market capitalization. Okay, so here I just explained for your just reference, like what and all the large like Asian Paints, Kotak, Tata, Reliance, HDFC, Unilever, all these are large cap company. And if you come to the Escort, Compton, and this Relax, so all these are mid cap company. Just example I given, and some penny stocks like these are all the small penny stocks which I given. Okay, but in future, after 10 years, even the penny stocks, if it is market perform good, it can be come into the mid cap or large cap. Okay, that is again depends. Even the large cap company, the company performance is not good, it can go from here to here also. Okay, depends. So what is the here I mentioned clear just to show that how it is like. For example, if it is a large company, the total market capitalization should be 20,000 crores. Okay, and mid cap will be 5,000 to 20,000, and the small cap will be 1 crore to 5 crore, 5,000 crore. Okay. So here it comes to the blue chip stocks, right? Blue chip stocks are like very large, and as I said, like most of them are like large cap company, which we call it as a blue chip companies. Okay, so which has no much risk on the when you're investing the blue chip, right? You don't need to take much risk on that. So it the varies of the stock price is like very less actually. I mean, it will not vary even in at the market worst condition. It will give good return. Okay. So this is called as a circuit, and then corporate action, and the shareholder will get the dividends. And this is the stock split. These are all the major, corporate actions. Actually, I don't think so. If I explained in word, you can't understand. Then slowly, I will make you understand this. And this is the bonus and right issue. All these are called as a stock, corporate actions. Okay, in the stock market, like long term, short term, and advanced decline ratio, and entry, stop loss, target. So these are all the main terminology which we use in the stock market. Okay. So here, very important, if you are a trader or investor, money management and the risk reward ratio will be very, very important when it comes to stock market. So that is why very important. First, before you earn, you have to learn first. So do not enter into the market if you don't know the market condition, and always first learn, then you start to earn. Okay. Yes, stock market is like that's why people, retail people, almost like they don't want to learn, they just wanted to ask somebody, okay, told that to invest, and they will go and they will just try for 1 year or 1 month, and they will quit the market. That is why most 90% of the retail traders are not success in the market. Okay, they have to follow each and every day, they have to learn in this stock market. Okay, it is, once if they learn, there is a unlimited money they can make in the stock market. So here the stock market, right? Here it is like intraday is there, positional trading. You have intraday positional trading also there. Like intraday is nothing but daily. For example, this is applicable for trading only. Okay, just you will buy today shares, and today only you have to cover it out. Whatever, if it is in profit or loss, that is advised for only for the technically sound or experienced people. Other than that, I don't recommend.
Yeah, you are unmute. Hello. You are speaking unmute.
Yes, yes. Hear you.